We just had two companies plunge after hours, and they're both in roughly the same sector, the consumer discretionary fast food chain sector. We had Starbucks that released some early quarterly earnings, and they don't have earnings until about a week or two from now. We also had McDonald's that just had an E. coli breakout news report that released, ironically, right? Ironically, after President Trump was just on his campaign in Philadelphia, visiting a McDonald's, serving some fries and talking his talk. Okay. So what in the world is going on? I want to cover it briefly today, give you some information, not politically driven, not trying to sway you one way or the other. This isn't manipulative in any way. It's simply for information. Please take this with a grain of salt, do your own due diligence, and we can get up out of here together and be informed and think like investors. All right. So my name is Dr. B. If you don't know who I am, I'm a holistic life and business coach and strategist for entrepreneurs and thought leaders. I'm an investor, also an options trader, been an entrepreneur for the past 8 years, was a former pharmacist, undergrad in chemistry, and transitioned into this entrepreneurial journey. And I've just decided to share my valuable information, hopefully with you, and give you a different way of thinking. All right. So that being said, let's jump into the value today, give you some information and get up out of here. We have McDonald's that fell after the CDC says there's an E. coli break linked to the quarter pounders. Now, this article on CNBC talks about the quarter pounders being linked to the onions on the quarter pounders. And there's been 10 hospitalizations and reportedly one fatal death, unfortunately. So it's very interesting that this has been happening in fast food chains for a while now, especially back with Chipotle. And we've got situations that are going on with McDonald's, and McDonald's was at all-time highs at $317 per share. And it just starts to report this E. coli break now. Here's Starbucks shares slide after coffee chain says sales fell again, and it suspends its outlook, its forecast, its guidance, right? Which, if you think like an investor, for my savvy ones out there, for my beginners, hopefully you start gaining this knowledge that this market, this economy is always going to be in favor of the hedge funds, in favor of the wealthy. But what you can do as a retail investor is start thinking in a way that thinks like a capitalistic society, that thinks, where's the money flowing? If I'm an investor, do I want to buy at all-time highs? Probably not, right? They want to sell at all-time highs. And a lot of times that selling begins to come in, or that fear begins to come in, when we have very overextended stocks and overextended markets, right? And a lot of times you don't know when it's going to happen. And in reality, I don't like to look at it as a speculative event. I don't like to look at it as a conspiracy, so to speak, because there are real lives that are affected, right? But it's very interesting as to how the news is released, right, at the time that where the stock is sitting or the index is sitting. Okay, so let's jump into the charts. But before we do, I want to show you how weighted McDonald's is on the S&P. It's sitting at 36 with roughly about 0.5% of weight of the S&P. Now the Dow Jones, more specifically, or Dow, our top 30 stocks, it's a little bit more heavily weighted, sitting at around 7. Okay, so I wanted to show you here, but if this is acting up a little bit, we'll keep it moving. All right, but the Black Swan event is really where I wanted to show you here how this is manipulated in favor of being a short-term crisis and a long-term opportunity. A short-term crisis shows us that every time there is this event that happens, and sometimes it's a spur of events that leads up to a massive event. So you see here that we've had the war, right? We've had the SARS event in 2003. We had the 9/11 attacks. These are real things, but they create financial opportunities for those that are paying attention and thinking like an investor. We had the global financial crisis in 2008, 2007, right? We had an intervention of Libya. We had the COVID-19, right? And now again, look at this chart here. Do you see that every time we're sitting somewhat at all-time highs and we're spurring these new all-time highs, and the markets just keep running and running and running. There's these little events, right, that just start spurring up, right? The recent ASML leaked earnings, the Starbucks that's going on, right? The McDonald's E. coli outbreak that's 2 weeks before an election, right? See where I'm going with this? Let's jump on the charts. Here's Starbucks. So Starbucks, you can see here, had a gap up after they announced their new CEO. The new CEO coming from Chipotle was getting excitement from investors. But we know that Starbucks has been struggling on the back end with their sales and the pricing of their coffee and just in general, their footprint, right? There's new kids on the block now, right? People are making their coffee at home. Consumer spending is going down slightly. So we now have this event that comes in where we have earnings that we're supposed to report on the 30th, and they leak the sales report, quote unquote. I'm using leaked as a just open term here, but they release their sales report, quarterly sales, and they released it about a week or so early. So now we've got this event that comes in that pushes Starbucks back down to where investors really wanted to pick it up. And now it's sitting underneath and it's forming lower highs, and we'll see how it recovers tomorrow, right? So fear in the market or fear in certain stocks create long-term opportunities, as you just saw. Let's look at McDonald's, and I'll get us out of here. McDonald's. You see here, McDonald's was sitting at all-time highs at 317 that it reached, right? Breaking out of this resistance of 293 and ultimately that 300 mark. And it has just been rising and rising and rising. But if you can see here, if you're a technical investor, or if you've watched my charting video or you're a client of mine, you know that the further away that it gets from its moving average, right, typically there's a cool off event, right? Stocks like to typically move naturally in an upward momentum back and forth, staircasing its way up along its moving averages. Now, this moving average is a 20-day moving average, and you can see how far away it is from it. And what did it do with that event? Pulled it back to roughly that moving average, right, which was sitting around 280. Isn't that ironic that it pulled right back to that 282, and after hours, it has recovered slightly about 10 points, 15 points back to 296, right? So please, 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 if you're new to this, I highly recommend that you understand the charts, that you see how the charts move, and you can see and potentially speculate and assume that something is coming. So when you hear a savvy investor saying, hey, I'd be a little bit more careful at these all-time highs, I'd be mindful that something, we don't know what it's going to be, is going to spur up out of nowhere and drive this stock price back down. Or potentially, if it's at all-time lows or at low points and it's a solid company, there's an event that spurs it back up. So watch these things that are happening. And interesting enough, inside of our Discord, right, we were looking, look at this, cannot make this up, 1018. You can see on my screen here, it is now October 22nd, 2024. On 1018, I put here a high-risk swing trade, right, with one of my community members that we've been watching. One of my clients, we've been watching McDonald's at all-time highs, high risk, not for all accounts. McDonald's puts 315, 1025 RSI overextension on a daily. They do have earnings at the end of the week, and it's an extreme greed in the stock market. And we have DIA, or the Dow Jones, at all-time highs. We have a double top at 317, and then it happens. So there's a prime example of how myself and my clients and my community inside of Leverage University begin to think using the charts. And then we begin to plan a risk to reward trade, not gambling, but looking at it saying, it's a little bit too good to be true. I didn't expect it to fall this far, right? But maybe a slight pullback into the 300 range and putting some time on our put options contract, right? Now, if you want to know, Brian, are you going to wake up to money in the morning and this contract going 1,000%? No, because I did not enter the trade. I was looking at it and I was like, is it right? Is it giving me confirmation just yet? Maybe a little bit today, but look at how it reacted today, right? It was trending back up towards the end of the day. And then there you go. Lower high, black swan event. There you go. All right. So with that being said, I'm going to close us out here. And hopefully this brought you some value, some information. Number one, about how to look at the stock market from a technical basis on the charts. Look at and prepare potentially for these black swan events, these situations that drive the stock price down for solid companies, to where it creates buying opportunities for those that are looking for those companies in their portfolios. And for my traders out there, right, it may lead to continuation for some other indexes and stocks, right, for SPY, QQQ, DIA to be driven down out of their ranges, which we've been sitting at all-time highs for a minute, okay, leading into the election. All right. Let me know what you think down below about this event, about these events that are spurring leading into this election. What are your thoughts? Let me also know with your like and your comments if you enjoyed this video and these are informational and valuable to you. Please make sure you hit that subscribe button, turn on the notifications as well, and I will see you all in the next video.